Everyone's waiting for the perfect time to buy or sell, but what if waiting is actually the biggest mistake? Today we're going to break it down.
Yeah, it's such a headline versus reality kind of thing, right? Because when Ken and I are doing our, YouTubes, there's so many people commenting like the market's about to crash. It's on the edge of crashing. And here I am like so busy selling homes as an agent in Phoenix that, it just seems like two different worlds going on.
It really does. I've been in real estate 14 years and it's my busiest year to date, despite all of the headlines of doom and gloom. And, it's just not what we're seeing out there in the trenches. Of course, real estate's local, but you have to look at your local area, not follow the headlines.
Yeah, and it's interesting because last night Ken and I went to a baseball game with one of the guys from the bank that we bank at, one of the main, heads of the bank. And he was saying that for his multifamily projects, like they're so busy. And he goes, it really doesn't make sense right now because multifamily is in a way worse spot than single family, but they're just having a bunch of people buying deals still. And the truth is like, part of it is people need a place to put their money. Investors need a place to put their money, and there's only so many options, and nobody really wants to just hold on to cash with everything that's going on.
And maybe those investors that they're looking for a place to park their money, maybe they're a little skeptical of the stock market, or they're a little skeptical of just putting their money in a CD because that's not really hedging inflation because they don't pay the greatest. So if they're putting their money into real estate, they're making bets on real estate, and it's not somebody with $10,000. It's people that study macroeconomics and local and regional real estate, and they're making their bet on that.
Yeah, and it's not even just that. Like I have a client that does a lot of creative financing in the multifamily space, and he was getting all these deals like January, February, March, April. And actually January, February, March. And then he was said in April on, institutional investors are now coming and swiping the deals from under him. So you have to kind of look at some of these signals that people way smarter than even both of us are doing, because this is institutional money coming in. And I think that, people are preparing for high inflation, and hard assets do well in times of inflation. Just factual.
Yeah. Well, and I think that the market rewards preparation and strategy. So if you're sitting on the sideline and you're hesitating, you're never going to get anywhere.
Right. Right. Well, and I think, the headline confusion is that these high rates are just dissuading buyers. Like that is like the headline. Like it's the high rates, the reason we don't have any buyers. But that's not necessarily true. Like obviously if rates come down, that is going to help buyers, but the rates, it's not that big of a difference in your monthly payment. Like if rates come down a point, it's not dramatic difference.
Yeah.
Really.
Well, and then the rates, of course, helps on the buyer side, but when the rates drop, it also unlocks sellers that are on the fence or can't afford to make their next move. So it's twofold. I mean, yes, it helps buyers with more affordability in theory, but also it unlocks all of these sellers that have the golden handcuffs of my payment's so low, I can't afford to move.
Right, right. And rates aren't even really that high. I mean, they're high for the times, but they're really not that high. And this makes a bigger difference in like multifamily when you're looking at like 30, 40, $50 million loans. But when you're looking at like a $300,000 mortgage, it's not that it's not that big of a difference. And I don't know if like first time buyers will be able to enter the market at these prices just because rates come down. Does that make sense?
Yeah, it does. And I think on the note of first time home buyers, to help them get homes, there's been some FHA and VA loan changes just to make their offers more competitive so they can compete with a conventional offer or a cash offer because they've gotten a bad rap over the years. So
what changes were made? I'm not even aware.
So there's like outbuildings. They used to call like peeling and chipping paint on outbuildings that have no structural, use for the house. So if somebody was buying like a little acreage for 200,000, you would actually have to have pristine outbuildings. Otherwise, you would have to completely paint them. So basically, those offers weren't even being considered because they were just too much work. Why put work into something that's, not, it's reached functional obsolescence, like an old barn. It's beautiful to look at, but it's got chipping paint. Well, why dump all of this or pay, thousands of dollars to paint it when it's pretty to look at, but it's not part of the house, So there's things like that that have really changed and will be changing as they roll them out coming up.
Well, and I think that's interesting you brought this up because I don't think the average seller or home buyer is aware of this, but FHA and VA loans are much more harsh on the inspection. So they're easier to get you qualified as the buyer because it's like government backed, but on the inspection, there are things that they won't tolerate that a conventional, Fannie Freddie lender would. So
Yeah.
sellers don't love them because they take longer traditionally to close, but also there's a bigger chance they're going to fall out based on, what's wrong with the unit. Now, if you have a pristine house and you're selling it and if it's FHA, you don't have to worry about it. But if you kind of have a little bit of a fixer-upper that, maybe someone's going to just live in and fix up over time or totally flip, that's going to be really hard to get on a VA or FHA. You can run into problems.
Yep, for sure. And I think, nationally, I looked up a couple of stats from NAR the other day, and existing home sales are running around 4 million units annually, which is still slightly below normal that we've seen over the last decade of 5.2. So there are less transactions going on annually in the US right now. And our inventory is at about a 4.4 month supply. And just a normal, healthy, balanced market is 6 months, 7 months, something like that. So when we're looking at a tight supply and less deals being done, what does that do? Supply and demand, it drives up prices. And that's what we're seeing. Even if the transactions are a little bit flat, home values have been or remained pretty stable.
They have. And, so I'm in one of those markets in Phoenix where it's getting all the headlines, right? Like you're in a little bit more stable of a market. I'm kind of in a more of a turbulent market. But realistically, like the issue is not how many homes are listed. Like we do have a pretty big supply here, but who has to sell versus who wants to sell is super, super, super different. So there's a lot of people. I mean, I'm working with 2 right now. I have 2 sellers. They might just delist, because we can't seem to sell their home at the price they want, and they don't have to sell it because they're in low rates. And I think that's important because, everyone focuses on buyers when they look at a crash. Like buyers can't afford it, buyers have more of an option because there's so much supply. But what they don't look at is the seller, because it's really the seller that would drive a crash. Weirdly enough, it's not as much the buyer, because if sellers are not distressed, they don't have to sell. Why would you have bought a house in 2021 for $500,000 and it's worth $460 now? Why would you sell the house? Like, why? And so what you're going to do as a seller is you're going to list it for, $500. And then if it doesn't sell, you're just going to delist it, because unless you have major life events happening, you don't have to sell. And there's not enough major life events to create this like huge seller, distress, because they're all in like 3 and 4% mortgages. And the distress that I am seeing, so we're seeing some foreclosures here and there, they've all bought in the last 2 or 3 years. So they all have a 7%, 6.5% interest rate. And those are the people, if we're seeing any distress, that are distressed. It is not the 80% of people that have a mortgage under 4%. Like, they are not distressed. I can't tell you how many people I talk to that are like, we would love to move, but with our interest rate, we're just going to add on to our house, or we're redoing our house, because at the end of the day, why would you give that up? A 3.5% mortgage rate to go to 7? Like, why?
Yeah. And we've actually been seeing that locally in our very rural Midwest markets that I work in. I was just at a home interior remodel place yesterday, and they said it's crazy. It's just, it's crazier than they've ever had it. And they're a good, reputable, busy business anyways. And they said it's off the charts. And I said, doesn't surprise me. Everybody says, hey, there's not much inventory. And I'm like, well, there's never any at any given time, because things just, they list, they sell, they list, they sell. So there's, not much for sale.
Yeah. And even in our market where there is, like, I was looking with a couple, they were thinking about selling their house. They could sell their house for about 1.2 million, and they wanted to buy something that was about 2 million. And we're going to look at these $2 million houses, and the guy's comparing, the capital gains he would have to pay because, he got it for so cheap. And then also the interest rate increase, and he's looking around and he just has, you know what, Danielle, I'm sorry for wasting your time today, but like, I just don't think I can sell. I think I would even be better off, ripping my house down eventually one day and just building on this plot of land. He goes, but I right now have a 3.5% mortgage. So like my payment would increase so much. And I'm like, you know what? I get it. Like, I agree with you, like if you wanted to buy, I was like all for it, but like, I totally agree. Like, why would you, and I think that's where a lot of people are, is why would you? And so when you're reading the headlines and you're looking at the buyers and all your friends are saying, I can't afford a house, so housing prices have to come down. What you really need to be talking to is the people that own homes. How is your housing payment? Are you ever going to move? What's your situation? And you're going to hear a lot of, God, I would love to move, but you know what? Like, our housing payment's so low, I couldn't even rent for this, and we're going to add on to our house, or we're going to remodel our house, or whatever. And because it's the seller distress that is going to be buying everything.
Yeah. No, it's interesting, and you're exactly right. So it's just, there's so many scenarios that go into it, but what do you do? That's why I'm a proponent of, even though I don't love the idea of interest rates coming down, because I feel like a healthy, balanced market is good. I don't know that they'll come down even with the new Fed chair. I know that our presidential administration, love them or leave them, is a proponent of that, but I don't know that it'll happen. I would be in favor of it just to unlock some of this inventory. So if somebody's that's in a 4% rate wants to downsize or wants to move somewhere else, they can without doubling their payment, and that would help a lot of buyers too.
Absolutely, because that is going to unlock people. Like, if you start to get closer to 5 and definitely 4, but I don't know if we'll get to 4, but even if we get to like 5, that will help, because if somebody has a 4% mortgage, going to a 5% isn't so much of a stretch. But right now, going to a 6.25 from a 4 or 3.5 is a huge stretch. And it's that is a big increase in payment. So, and I think too, what people need to understand is, we do have a new Fed chair. Ken and I disagree on this. I do think they're going to bring rates down. He does not. He thinks for the rest of the year, he said maybe a 1/4 point, but that would be it. I actually think that they are going to bring rates down, and I'm going to be surprised if we don't get at least a 1/2 point by the end of the year. But we'll see who's right. What do you think?
I think I'm kind of in the middle. I think they'll bring them down a little bit, but not as much as I want. But I agree
how much
with you.
Is that? Is it 1/2 point? Is it a 1/4 point? Is it a point? What is it?
1/4 for sure. Hopefully a 1/2, but 1/4 for sure. I think a little bit, especially with everything that's going on in the world. People are feeling the pinch of $5 gas. I think there's all of those factors factor into it for sure.
Yeah,
you guys have to make a bet in your household.
We did.
You have to make
We made a $500 bet online the other day.
Nice.
Yeah. Although Ken tried to hedge it because he was like, "Well, yeah, I don't think." I was like, "Okay, $500. They bring You're saying they're not going to bring rates down at all because that's what he said." And I was like, "And I'm thinking they're going to bring them down 1/2 point." He goes, "Well, maybe a 1/4, but nothing significant." And I was like, "Okay, we got to get your bet straight. Like you can't keep changing it." But no, I just think there's a lot of pressure, not just from Trump. I think that the Fed is in this weird position where they're right now doing nothing, and they're kind of seeing how the job market is doing, and they're kind of seeing how inflation is doing. But at the end of the day, they know the job numbers aren't fully accurate, and they know that the economy is weak right now. And I just think that they're going to lower and deal with the inflation. I don't think they're going to lower quick. Like, I don't think they're going to be like, a point. And, but I do think like these 1/4 point cuts and just kind of see how inflation does with them is what they're going to do. And I do think they're going to do more than one, unless inflation just completely goes crazy. Like, I do think they're going to do more than one cut. But I think you're right. They're going to do about a 1/4 point at the time. But you want to get in the housing market before they start doing this, because, in my opinion, when we had rate cuts, so rates did go down. Prior to this Iran war, rates were starting to go down, and I was getting really busy. And I think there's a sentiment with buyers and investors that when rates start to go down, this is the time to buy because prices are going to start to go up. And I think that actually would have happened if we wouldn't have gotten the Iran war and then rates went back up and then everything, the economy kind of stalled. So my point is you do want to get in before or at the very beginning, at least, of these rate cuts. You don't want to wait because if they do continue to cut rates and if inflation does continue to rise, there's this, you could miss the boat.
Yeah. Well, if you wait, it could mean higher prices. You're going to have more competition because if you're waiting, you're got to bet that everybody else is waiting too, or there's other people that are waiting in the trenches, watching everything just like you. And then if rates do go down, that half a point or even a quarter point, I mean, we're still seeing multiple offers on a lot of things, but there's going to be more bidding wars. So it's, do you sit on the sidelines and wait for those rates to go down, or do you find a good deal now because good deals exist in every market? And then if rates go down, you can refinance, or you just build, that much equity and you can turn around and sell, and trade into something else at the time. So that's the pros for buyers right now, is really being keen on where you think the puck is going and skating towards it.
Yeah. And like I always say, don't wait, negotiate. Like, don't wait for the house to come down. In our case in Phoenix, like sometimes even 10%. Like, negotiate. Like, I just had a client, the home was listed at $450. They reduced it to $425. The next day we made an offer for $400. They took it. Okay. So like,
and you would normally think they would never think.
Would never
normally
think.
Somebody would say they just dropped it 25 grand. There's no way they're going to take her offer. And you feel defeated before you even present something to them. Like, make the damn offer.
Make the offer. And also, like, don't wait for prices to come down. Like, we just got a price decrease. Everything in that place has been selling for, $420, $430. We just got one for $400 that's nicer than those ones. So, like, make the offer and take advantage. Don't say, oh, they did 400. Well, I bet if I wait more, they'll do, 375, because at the end of the day, somebody is going to buy it. So like, you have to, you have to really calculate this. And, it's so funny because almost all of my deals this year have been investors, almost all. There's been a couple that have been home buyers, but almost all have been investors. Now, what does that tell me? That tells me that investors are more educated about the market. So they understand that if they can make this thing cash flow, obviously they're putting more than 20% down, but if they can make it cash flow, then this is going to be a good long-term play for them. Home buyers are just waiting. And I'm like, don't wait, because you're going to miss the boat. And I know everyone's going to comment on here, oh, you're so crazy, the market's going to crash. But you guys have been saying the market's going to crash for 2 years, and the market hasn't crashed, okay? Because people are still buying. And in fact, they're buying more right now than they have been, at least for me, in the last few months. So like, you have to understand that, and Ken and I talked about this in our live yesterday, like, the government likes asset inflation. The government likes stock market inflation. This is what the government likes. It's good for the government when things inflate because they get these capital gains taxes, and they get businesses selling, and they get, people making more money if the economy is doing well, and then they pay more tax. And so there's all these things. So like, as much as like you want the market to crash, the government does not want the housing market to crash. The government's going to do what it can to not make the housing market crash, but also the fundamentals aren't even there. Like in 2008, you had seller distress. You had sellers that put 0% down, and then they were in a bubble loan. So they could easily walk away and say, screw it. I'm not going to do this because I can't afford my payment. I basically have just been paying rent on this thing for 2 years because I didn't have to put down a down payment, and I'm just going to walk away from it. Well, now you have people that have 10 and 20% down because it's not super easy to get a loan with less than that. So you bought a 400 grand house, and you put down $40,000, and you're just like the payment, and you have a low interest rate, but you're just going to walk away, or you're just going to sell it for less than you bought it for. Like, why? Like,
exactly.
Why? Especially because in those cases, you can rent it and make money. And that's what I'm seeing people do. Like, I'm seeing homes sit, and maybe a little bit price decreases, trying to sell it, doesn't sell, they throw a renter in there. Because why would you take the hit if you don't have to?
Well, and if you were one of those people that bought in, let's just pick on the Phoenix market in 2005, 6 or 7 before the crash, and you didn't panic sell, and you're still hanging on to that property now, holy gravy train. Like
Yeah,
it's fine.
you're fine. You made
just
money.
have to ride it out and trust the process. And we're not going to have a crash like that. I really firmly do not believe we will have a crash like that because, like you said, for it to happen, sellers have to be in distress, and we're not seeing that. Sellers are sitting on more equity now than ever in the history of anything, you know?
But even if they weren't, because people say, well, equity can disappear quickly, which they're right, you know. But
Yep.
even let's say that all their equity disappeared. They're in a 3.5% mortgage. Their mortgage payment is less than their rent payment. And guess
Yep.
what? If people start actually losing houses, which is not going to happen, but if they did, they still have to rent, and their rent payment is going to be more than their mortgage payment, or going to be, more than their mortgage
Yes.
payment. So like,
Yep.
as an educated human, you're like, okay, my mortgage is $1,300, renting would be $1,800. I'm really struggling with this $1,300. You're gonna like literally move in family members before you're just going to let go of your down payment and just say screw it, and then have a higher rent payment. Like, it's not like '08 was very different, because '08, like you said, we had distressed sellers. We also had rent that was cheaper than a mortgage. We don't have now. If you buy right now, your rent's cheaper than a mortgage. Like if you buy like today at 7% rate, your rent is most likely cheaper than your mortgage. However, I'm not talking about the people in the last 3 years. I'm talking about everybody else. So everybody else, which is who you would need to start defaulting in order to have a crash. Like why? And so that's why like everyone gets so mad about it. But you really have to ask yourself like who this is happening to, and who do you know that owns a home that's in distress? Because in '08, you could be in a room and know multiple people that was in a home that was in distress because they had a bubble mortgage that was at 5% and then moved to 8%, but here now, please tell me a seller. I don't know any that are in distress right now, or not a seller, but a homeowner. I don't know any.
Yeah.
And when people come to me, I've only had one person come to me with an issue, like a short sale kind of issue, but he bought at a 7% rate like 2 years ago. I mean, those are the people that are in distress.
Yeah. The only time I've had a distressed seller in the last year or so was an older elderly person, fixed income, went to the nursing home, and the nursing home was essentially forcing the sale. Mm-hmm. Okay, great. You look up assessed value, try to get them, what it's worth, but that isn't even a form of distress. That's just I have to sell because I'm, going to the next stage. And that's like the most type of distress that we've seen in the area. It's wild.
There's always going to be distressed sellers. Like there's always going to be situational distress sellers. Doesn't mean it's a distressed market. So like right now we have some flippers that are distressed. We have some Airbnb sellers that are distressed. We have some, like there was just an estate sale where I wouldn't say they're distressed, but they don't really care what they get for the house because so they're willing to make a deal because they don't want it sitting on their books, for the trustee. So you're always going to find, and those are great situations because then as a buyer, you have a lot of leverage because you have a distressed seller. But having a distressed seller is not having a distressed market. We're like in '08, like, I don't know, most of the listings were distressed. Most of the listings were going back to the bank. So that's not the same thing. And, you just really have to wrap your head around it because you're waiting and everybody else is still buying. You're waiting and then the investors are still buying. And so as a home buyer, you just have to wrap your head around what you want to do. And I wouldn't even say it's like urgent, like you have to start buying today, but there's things I would do today to get you ready. So when you are ready to buy, because I'm telling you, when they start dropping interest rates, if you don't hop on that train sooner than later, you're going to miss it. Like I'm telling you, like we've seen it. If you not even don't forget about 2020 when we saw it, but go back to, to all these different times, start looking at when the Fed cut rates and the housing market, like just start looking, and when you have a slow housing market and rates start to fall, there's demand. People are just waiting on the sidelines, just like you. So, so there's things you can do. And one of them is getting pre-qualified. Because most people don't think to get pre-qualified until they want to go look at houses. I mean, I have this all the time. I want to get pre-qualified. I don't want to do it yet. First, I want to go look at houses. So then we go look at houses, and then you like a house, and you're like, I need to make an offer on it like today. And I'm like, well, you got to go get pre-qualified. So then that can take a few days to a couple weeks, depending on the lender. And it's just like, and you don't even
and
know
that house is gone. It's gone.
The house is gone.
You need to be proactive. Yeah.
And you don't know what you're pre-qualified for either.
Exactly. Or what the payment would be. It's like, yeah, I could afford that house. And then you find out what the payment is. You're like, oh, I'm not that comfortable with that payment. Then why did you waste everybody's time? Like, go get pre qualified. Then you know exactly what your budget is, exactly what you're looking for. And then you're not going to miss out on a house. When you find a house that you love, you're ready to go and be like, okay, Danille, let's move. Let's go, you know?
Exactly, because and like you said, you have to know your payment comfort zone too, because that's
Yes.
important too. Just because you're pre-qualified for $600,000 does not mean that you want to go buy a $600,000 house. Like maybe you're only comfortable in payments in the $450,000 range, and so then you have to kind of look at that, and it's important to understand all these finances, and then I think you start to go look at houses that are kind of in your price point to get familiar with the area, because
Yep.
you're never going to be comfortable buying if you don't understand what a good deal looks like. So when you first go out, you're just seeing these houses, right? And you're like, oh, I like this one. I like that one. You don't know if it's a good deal. You have no idea. But after you've seen 7 or 10 houses that you like over a period of time in your $450,000 range, and all of a sudden you see one and you're like, oh my God, this place is super nice. This is a great deal. And because you know the market. So just because you want to say buy in October right now, you should start looking right now. Like you should start getting familiar with the market. Even if you're not going to places, even if you're just clicking online and kind of looking to start, you should be getting familiar, because this is the biggest purchase most people make their whole lives. You want to be very confident that you love it, that it's a good deal, that it's everything you've dreamed of. You can't do that by just showing up to places and not doing any research. It's going to take months for you to feel comfortable.
Yeah, exactly. And then if you start looking now, and let's just say you're looking for October, like you said, if you start looking now, you're going to see list prices, but then fast forward a little while, you're going to see sold prices. So the list price is important, look in that range, but then also see what they closed for, and maybe if you're looking at 450 in your market, you set your search, range up to 500 or whatever the number is, because like you said, don't wait, negotiate. If there's a $500,000 house that comes up for sale and you're thinking, oh, I don't want to go over 450, but I could swing 460, small payment difference, but it's exactly what you want, then go for it, but then at least you've had the time to educate yourself on your market, on your location, to give you that confidence of, yep, I'm going to swing and hit this one out of the park, because we know exactly what we want to do. And then you don't suffer from analysis paralysis, which is a real thing.
Yeah. And also too, like start looking at these listings that you even feel like are too expensive, because, if you're not buying for 3 or 4 months, like in our market, they might still be there potentially. Cause right now, average days on market is like 4 months. So like they might still be there and be a lower price. So mark them. Yeah. Follow them, get excited about them, and then when they start dropping the price, so maybe in the fall when you're looking, you'll be ready, and I'm doing that with buyers now. Like I have a buyer, she's relocating, and she doesn't want to buy until like October, November next year or this year. And she's like, I just don't even want to look yet. And I'm like, girl, I am saving stuff for you because I know what you want, and I'm just tracking it and waiting, because this stuff some of it's going to still be there. Some of it'll sell for sure, but some of it'll still be there. So like, we just have to start marking now. Now, back in 2020, you would never do that because things were flying off the shelf. But, you could have something that's overpriced, or that maybe is very unique and only your seller or buyer would want it. And it might still be there. So, and then when things start sitting for 4 or 5 months, that's when you can really negotiate. So then I'm like, so like some of these I'm marking now could be a really good deal in October.
Yeah, and I think those are some great buyer tips. And on the flip side, if you're looking to sell in this market, your pricing really does matter. And of course, if you fall into the bucket of I don't have to sell, I would like to sell, great. Put your price on it. If it sells, great. If it doesn't, take it off the market. But if you're really looking to move for job changes, or you need a bigger house because your family is growing, or whatever that is, your marketing matters more than ever. And, average agent or average marketing gets average results. Make sure you're connecting with an agent that actually has a plan and not a hope and pray and stick a sign in the yard type of deal. Because buyers are starting their searches online. So working with an agent that has a massive online presence, that knows how to game the online platforms as far as pricing and price bracketing and positioning within the market, within other listings. Those are all very real things that educated agents know. So you as a seller have the best chance of getting your price when you go to list.
Yep, absolutely. And also just the negotiation part of it on a seller, because the buyer negotiation is one thing, but understanding an offer as a seller is another thing. And for me right now with buyers, they're being very nickel and diming on all the inspections. So I really like to understand who this buyer is, how experienced they are before we accept an offer. Like if we're going to accept a little bit lower of an offer, I want to know it's an as-is purchase, or I want to know this is somebody that's experienced. It's not going to nickel and dime us. I want them to know that if you nickel and dime us, this is going to fall out. So don't waste your money on the inspection. Like there's a lot of things that for negotiation on the seller's behalf is very different right now because it is a buyer's market. And the last thing you want as a seller is to go under contract and it fall out. Like it happens, but it's really the last thing that you want. It really hurts your sale. So we try to avoid that at all costs. And a lot of agents don't. They just accept an offer and move on. And I know this because I make offers all the time and agents just accept them and they know nothing about my buyer at all.
Yeah. I know it is great to mention that you do not want something to fall out of escrow or, from go back to pending to live or active online. And good agents are having those conversations with, the agent on the other side to understand more of where that buyer is coming from or vice versa, because good deals, like you're being proactive with it versus being reactive if a problem comes up. So good agents are solving problems that you don't even know about.
Exactly.
Which is to summarize it. So,
but I go ahead. I was going to say, I do want to discuss a few things that have been going on with us in our own personal, real estate lives. Cause I want to start adding this to the show. Cause I think it'd be really interesting for people.
Yeah. For sure. So one thing that I had happen last week, I had a seller call me. They have this house listed, small town. It's vacant. They redone it, beautiful inside. And a scammer screenshotted the pictures from the MLS and posted it up for rent, like on Facebook Swap Spot or wherever they found it. I'm not sure. And this renter sent this person money to hold the rental for them. So they get to the house, they back up their moving trailer, and it's a small town, right? So all the neighbors are calling the owner like, did you actually sell the house? Are you renting it out? And the owner of the property had no idea what was going on. He went over there and figured it out that, the person saw it online. They sent in money and they got scammed out of money, So there are real estate scams out there all the time. You have to watch your back and be very careful on those types of things.
I get very weird so I do advertise my rentals on Facebook Marketplace because I occasionally get a renter that way. If I was looking as a renter, I would focus on Zillow rentals. And the reason is because they do a much better job of verifying and keeping track of fraud. Not that there can't be fraud on there, but they do a better job of flagging things and, they make it pretty difficult, And so I would just veer that way. And even if you see something on Facebook, I would say, oh, do you have a Zillow rental listing you can send me? I'm interested in it, because I would, and also, you want to go down there, you want to meet the person, you want to look into the person's background. Hey, I'm sending you money. So do you mind sending me your information so I can look you up and do some due diligence here? Because, at the end of the day, you can get scammed and you can even get scammed by going. Like I've heard of people, it's like somebody that has access to an apartment that shows you the apartment and then they still scam you, but that's at least much more thorough. But, it does happen. And actually I have a funny story. I rented my condo as an Airbnb just for a month because the closing was delayed and I had this gap. So I rented it to this guy and he was moving and he needed a place to stay for a month. And he sees it and it's kind of weird, right? Because I put on Airbnb, it's vacant just for the month. And I'm basically just charging him like a normal rental amount, but it's covering all my bases. So it's win-win. And he's a pastor at a church and, we're talking and, and he wanted to meet me and, and I had to give him my personal Zelle because I didn't want it to go into my business account. So it's some weird, it's not business professional at all, right? It's like Danille 83 at, whatever. And he's like, and he texts me, he goes, please just don't scam me, okay? Like, and it was just like, because it was so like kind of sketchy, and I was like, I promise you, I'm not scamming you. And but it was funny just because he was like, okay, I'm about to send you like $4,000. Like, please don't scam me. But I get that because it's like I showed him this place. It's like empty and like he doesn't know who I am, and he's gonna send me $4,000, and we had like a month lease, but like what, you know what I mean? So I just think like you got to be careful in those situations. And I'm sure he deep dove into who I was and everything else, and that probably helped. But you're blindly sending somebody, and if you send somebody a Zelle and everything, like you can't get it back. So like, and that is just, and that's why I take Zelle, because I don't want my tenants trying to get money back from me, but it is a risk on your end too.
Yeah. And you as a tenant are vetting that landlord, just, like landlords vet tenants, it's a mutual agreement. You're both signing an agreement to be there. So it's great that you bring it up. It's a good reminder, Yeah. One more thing I had happen this week. I bought another rental property.
Woohoo!
And yay. So quick, just to share with you guys, because good deals are in every market, even though it's a seller's market in my area. A seller came to me and they had a rental. They had existing tenants in there. They're paying under market rent. But they wanted to hit the easy button. They wanted to sell it for a fair price, but they didn't want to go through the work of getting the tenants out and having to repaint or recarpet or to get it show ready. So if you put your name out there like, hey, we buy properties like this, we're fair on price. Networking is huge. Your network is your net worth. And we were able to secure a really good property that meets the 1% rule. We just met with the tenants and raised rent. So they're still below market rate, but we're still cash flowing. So it's kind of that happy medium because they've been there several years. And it's great. So added another one to the portfolio this week.
That's awesome. That's really, really great. Well, I have a not so great story, but I think people will find it interesting. It has to deal with HOAs, which we all love to hate. So I had a client and we're in the middle of this deal and we're trying to buy, we have an offer in. She's super easily going to be qualified. And then find out from the bank that the insurance does not meet Fannie and Freddie standards for any kind of loan, not just FHA, conventional, anything. So I'm like, okay, well, this is a problem. And so they had just changed their insurance policy in February because the HOA was trying to budget. And so they figured they'd lower the deductible per unit. So I'm like, well, I've run into this before where the HOA didn't know that their insurance disqualified them. So we'll let them know and hopefully they just fix it. Well, the president of the HOA let me know that they don't feel like this is going to hurt property values, that they can't get conventional financing, and that you can still pay cash. Thank you. I'm glad we can pay, $450,000 in cash, or you can get a non-warrantable loan. So I look into a non-warrantable loan and it's at about 8% right now. And so obviously the deal fell apart. We backed out. But the point was two things. The point was that one, this HOA really thinks that this is not going to hurt property values. And I'm like, okay, they literally just did it. So I'm like, oh, this is going to, so I'm interested to follow this as it progresses. But secondly, is that my buyer could have taken on the 8% non-warrantable loan, but I couldn't in good conscience tell her to buy in there because their prices are going to go down. Because if you can't get conventional financing, I mean, your buyer pool goes super low and it's not easy to get a non-warrantable loan. And like I said, the interest rates are, anywhere between 7 and 10% depending on the bank. So it's not a good deal either, especially with rates being so high. So these are the things though that you do have to watch out for with HOAs. And, when they make changes like this, like it will really reflect the price. And I think the interesting point of this is I think why they're doing it, because I've run into this twice now in the past year. The other one fixed it right away. This one does not feel like it's important to fix. But they're trying to cut cost because everything has gotten so expensive. And these are just a board of people. They don't know what they're doing. These aren't like astute people. They're just like a lot of old people on a HOA board and they make decisions.
Exactly.
And, and they're probably not looking to sell anytime soon. So they're not really worried about it. But it does bring the property values down. So when you're looking into an HOA, like you always want to be really critical on the finances and you always want to read the meeting notes. Like I never really used to do that. But now the past couple condo sales I've done, I just pull the meeting notes from the last couple of meetings because at the end of the day, you should know what's going on. Like, you should know if there's issues like this, if there's talk like this. You really need to know, because if you buy in there and then they decide to do it, I mean, the seller's obviously super pissed, right? Because now he can't get a buyer that has conventional financing. So, I mean, that's going to be
Maybe
very
he will
difficult.
go raise hell at the next HOA meeting then. Like, we need to do something, because if he's running into issues with selling, so are the next people, down the line.
Well, I guess this wasn't a surprise, because I guess they've been dealing with a couple of these, and that's what the lady was telling me, like, oh, no, you can still get a conventional loan. I'm like, no, you can get a non-warrantable loan. It's not the same thing. No. We've had people get conventional, and I'm like, no, you haven't, because I even talked to my loan guy who can do anything, and then the bank, and and both were like, it's got to be non-warrantable. And so it's just, you just have to look at that, because that's interesting. But you also want a knowledgeable realtor to tell you, like, don't get the non-warrantable loan. You're basically buying, and like, if you're going to buy this thing, wait a year and then go and look at this building, right? Like, let the prices fall based on their decisions before you before you buy here, So it's just good to know. It's those kind of things, though, that as a buyer, you just never would necessarily know. And so that's why you need some advice.
Well, and it speaks to your ethics and integrity on telling that buyer, hey, I don't think this is a great idea, and here's why. I think you should wait, because good agents tell buyers the truth. And if you think like, hey, this is a bad property, I have to do that oftentimes too, where it's like, did you notice this? And I'm pointing out this. And, it's one thing to point out something with, the physical part of the property that you can see or somebody can see with a trained eye. But in your case, it's more so like the paperwork, the back end of things. It's like, this is an issue and here's why, and pointing that out. So that's awesome.
Yeah, but it's one of those things. But I am seeing this more and more with HOAs, and I'm starting to get more critical with HOAs, because they're in these positions where they're fighting to not raise, the HOA fees, which I understand, but they cut the stupidest things. Like your insurance to get lending. Cost? Yeah. At what cost? And also, like, I owned in a building and I sold it, but like, they decided to cut pest control. Okay, well, now you have a condo building with no pest control. So I had to get my own, which is fine, but like, not every owner is going to do that. So now you're going to have cockroaches and all this stuff because you're not spraying the whole building. And so I get what they're doing and I get why they're doing it. But at the end of the day, like, you just have to really, that's why a low HOA fee is not always a good thing. And it was interesting, because this building's HOA fee was lower than normal here. I wouldn't say it was low, but lower than normal. And see, this is what they don't want to raise the rates on themselves. So, and a lot of them are fixed income, Social Security. So they start cutting things, and you just have to be careful what they're cutting, because if somebody cuts something, and that's probably one of the worst things you could cut, because that's really going to hurt your property values. And there's just no way it's not. Like, when you say cash buyers, you don't take FHA, you don't take conventional. Usually on non-warrantable, you have to have 20% down. I mean, you're taking out a big swab of your buyer pool already in a slow market. So,
yeah. Interesting.
Yeah.
I never would have thought of that, but that just raises so many red flags, honestly.
Gotta love it. Now, sometimes though, the HOA does do this sometimes, and it's just a mistake, and then they correct it. Like, and that's what happened on the FHA deal on the other property that I was working on. Sometimes they make a change. They're like, oh no, we didn't realize that, that this would make us not eligible for FHA finance. So then they fix it. And so I'm not really concerned about that. And I don't think you should be concerned about that, because that's just the HOA, a bunch of uneducated people making a poor decision and fixing it. It's when that they don't want to fix it, or it's a budgetary issue where they don't have money to fix it, that it's a bigger problem.
Yeah. Underwriting those HOAs.
Love it. Gotta love it.
No 2 days are alike, which is great, which is why it's fun. So.
Exactly. But thank you guys for watching, and we will see you next week.